Assalamu alaikum, everybody. Said I'm back again with another YouTube video. Today is going to be the last, yes, you heard that right, the last installment of the technical analysis part of my free trading course. All right, so pretty much, guys, I've covered like everything needed in technical analysis. And if you guys disagree with me on that, that's because you guys are focusing too much on technical analysis. Quite frankly, guys, technical analysis is not that difficult and it's not that hard. And you're overcomplicating it because you're just not doing the right things. All right, simply put. But going to be the last installment, and so I hope you guys like it. If you guys like this course, guys, like the video, comment down below, subscribe to the channel. Let's get started, because I want to get started as quickly as possible so I don't make this one another 30 minutes, but chances are it's going to be 30 minutes anyways. All right, so let me like show my ears for a second. It's kind of weird wearing a hat, guys. I don't like wearing a hat, but I'm also too lazy to do my hair. So this installment is going to be called Confluences. Now, why is it called Confluences? Very, very simple, guys. The reason is because when you're day trading, you want to be using multiple confluences together, right? You don't want to be just trading off of one thing. Let's give you an example why, right? I've told you guys about support and resistance, right? Now, here's the thing. This is a level of support, right? Point blank period. No one is going to argue with me on this, right? We have this level right over here. Price touches here, goes up. Touches here, goes up. So if you see this again, you get the rejection, you get the bullish engulfing, a bullish candlestick right over here, pretty decent momentum and everything, right? You would think it's a level of support, and you take it, and you will lose. And then you do it over here, and you probably would do it over here again, right? This is also another level of support, albeit not the strongest level of support, but a level of support nonetheless, right? Bullish momentum from here, comes back in, you take it, loser, all right? So now you took what? Took one loss over here, all right, because you put your stop loss below the support level. Bam, right over here, take another loss. Okay, now guess what? You want another level of support. Okay, right over here. Boom, you see a couple of rejections going. Okay, you take it. Bam, another loser right over here. Okay, see this level, very strong level. You see even more bullish momentum over here. Take it. Bam, another loser. Right, and so the cycle keeps on going on and on and on. And you're probably thinking to yourself, well, Syed, what the heck? You're telling me that support and resistance works in another video, and now in this video, you're saying that it doesn't work. No, I'm not saying it doesn't work. I'm saying that it doesn't work in certain times, and you have to be smart about the times that you play support and resistance. The same exact way you have to be smart about the times that you play any other thing, right? And this is what this video is going to be going over: how to identify when to use certain things. And the main thing is that you have to use things in confluence with other things. All right. So if you're in an uptrend, right, what are you looking for? You're looking for buys, correct? So what are you going to look for in buys? Support. What are you going to look for if we're in an uptrend? Bullish candlestick patterns like the bullish engulfing. Okay. What are you going to look for? Indicators telling you that the momentum is continuously going up and up and up. All right. So let me explain this to you. Now, I talked about an uptrend, but this is actually a downtrend, right? No one is going to tell me that this is not a downtrend. Okay. Price action, market structure, literally everything I've taught you is telling you this is a downtrend, right? Look at this. Low, high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, etc. You get what I'm saying, right? This is a downtrend, right? Let's add an indicator to this that you guys know and love called the exponential moving average. You guys know I love using the exponential moving average for a long-term trend. And look at that. Price is below the 200 period exponential moving average. If you watched the previous videos of this trading course, you know that when price is below the 200 period exponential moving average, it is in a downtrend. So if price is in a downtrend, would we be looking for longs? No. Why would we be taking trades at support then? We wouldn't. It makes no sense, right? We have to take trades with a bunch of confluences, with a bunch of factors that are stacking together. Okay? You're not taking a trade based off one thing, guys. Because if you take a trade based off one thing, if you take a trade based on just two things, this is what's going to end up happening. What I showed you before. You're going to take support trade over here, lose. Here, lose. Here, lose. Here, lose. Here, lose. Here, lose. Actually, this one probably would have worked out. Okay? But that's what ends up happening when you take trades based off of one thing. We are trading based off confluences. You need multiple things telling you that, hey, price is going to do this. You need multiple things going in your favor. This is where people get it wrong. They trade support and resistance. They trade liquidity. They trade with indicators. They trade candlestick patterns, chart patterns, whatever it might be. And every single thing is going to work sometimes and it's not going to work other times. So how do you push probability in your favor? You trade it with combining other things as well. Instead, beginners, they just see support and they buy and they lose. And then they think trading is a scam and they comment on my YouTube videos that I don't know anything, right? Well, they see that the indicator says that we're in a downtrend, so they start selling. And then they get stopped out. They're like, this guy's a scam. He's teaching indicators. He doesn't know what he's talking about. Okay, doesn't work like that. You need multiple things, right? The overall thing you're always going to look at first is what the heck is trend, right? So what is your trend? That's number one. That's your first confluence you are always going to be using. Okay, so we know that the trend is to the downside, and it's either because you used market structure and you figured out that we were in an uptrend and then we shifted to a downtrend right over here when we broke this low, or because price is now below the 200 period exponential moving average. Okay, so this is your first confluence. For some reason, it just keeps on adding that. Anyways, first confluence will always be trend. Okay, now the second confluence. The second confluence is going to be your market structure, your key levels, etc. Right? So let's say you're taking a trade over here. Well, this is a level of support, correct? But then it becomes a level of resistance. Why does it become a level of resistance, guys? Right? Well, we had this level right over here, support, right? Price has a decent amount of bullish reaction from here. Price breaks below, so now it's not support anymore. What does it do? Comes back, retests, bearish momentum from here. This is now a resistance level. Okay, so what happens? Price comes back to this level right over here. Okay, so now if we know that it was support and it's broken below, and we know that it was resistance now, and prices come back here, what's most likely going to end up happening? Price is probably going to continue going down. But now, why do we know that? Why are we going to take the trade off here? Why are we not going to take the support position from here? Right? It's very simple. The overall trend is in a downtrend. All right. So once we figure out the trend, we figure out the trend, we look at structure. Right. So you want structure to be in your favor. And structure in this context, how do I spell structure? Structure is also known as just key levels, right? Now again, I'm using support and resistance, guys. You can use supply and demand. You can use freaking liquidity, right? If this was liquidity and you're waiting for liquidity to be purged, where's the stop loss going to be? Right over here. You see liquidity is purged right over here. Okay, so you can use whatever the heck you want, guys. Just in this example, I'm going to give you support and resistance. Now, again, our overall trend is in a downtrend, so we're only looking to take shorts. So if we're only looking to take shorts, I don't care about support. I only care about resistance. This is now resistance. So now, guess what? Overall, we're in a downtrend and price is at resistance. Two confluences in our favor. Are two confluences enough? No. If price just reaches back here, am I going to be shorting? No. I need more than that. So zooming into this, what do you see? What do you see right over here? Hold on, let me go over here. Cool. What do you see right over here? You see strong bullish candles, right? We have this bearish candlestick pattern, doji, bullish candlestick pattern. What is this candlestick pattern, by the way, guys? I'm going to give you 5 seconds to write it down in the comment section. 5, 4, 3, 2, 1. It is a morning star candlestick pattern. If you didn't get that right, it's okay. Trading is not like a test in school, guys. You can always have your cheat sheets in front of you. It's not that big of a deal. Okay, and eventually you'll just memorize this. But right, we have a morning star candlestick pattern, which is a reversal candlestick pattern. It's a bullish reversal candlestick pattern, and you'll notice price goes higher and higher and higher. Now, what do you see ends up happening? We come to this level of resistance. We get a wick rejection, small bearish candle, weak bullish, strong bearish candle. Okay, cool, strong bearish candle. So what do you see? We see bearish momentum stepping into the market. We see bearish engulfing. Okay, right over here. So what do you have now? You have a trend that is in your favor. You have structure / key levels in your favor, right? Whether it's liquidity, whether it's supply and demand, whether it's support and resistance, either way, they are in your favor, right? You are back at a resistance level. What do you see? You see bearish momentum. You see bearish engulfing candle, right? So we have a candlestick pattern in our favor as well. Candlestick pattern. Cool. So now you have 3 confluences. All of them telling you that we are going to the downside. Everything telling you that we're going to the downside. Right? Now, if this isn't enough for you guys, which by the way, it's enough for me, right? I would, if I was taking trades off support resistance, I would take a trade like this, right? And you'll notice it works out. Again, it's in hindsight, guys, but these are the exact trades that you should be taking. You can add one more confluence in your favor, right? Let's go to the RSI. Let's see what the RSI is saying. Again, if you watch the previous video on indicators, you know that if we are below 50 on the RSI, that means that the price has enough momentum to the downside. If we're above 50, that means price has a lot of momentum to the upside. So let's go over here. What do you see? In this candle, where we get this bearish engulfing right over here, let me see if I can find that annotation that works really well. Okay. Bam. I just circled it. Let's make this a different color. I don't like red. Sure, whatever. You guys can see it, right? This bearish candlestick pattern. A little light. Let's go to the crosshair. At this point, what is RSI? RSI is also below 50. So now not only do we have trend, not only do we have structure, I spelled this wrong, I know, guys, don't make fun of me, but we also have momentum indicator in our favor, right? Because the RSI is below 50. So now that we have this, let's actually write down the actual confluences that we have for this trade, right? Going step by step. So number one, we're in a downtrend. And how do we know we're in a downtrend? Market structure, and we're below, price is below 200 EMA, right? Put simply. Okay, let's look at structure case. We're in resistance, right? We have liquidity, and we also have supply and demand. But I didn't talk about supply and demand, so we'll forget about that for a second. And let's go to candlestick pattern. We have a bearish engulfing pattern, and we just have weak bullish candles as well. Weak bullish. Okay, let's look at our momentum indicator. RSI is less than 50. Okay. So you literally have everything you'd want. Right, guys? What's our overall trend? Downtrend. Market structure is telling me that, and prices below the 200 EMA. Key levels are, we're at resistance. We've also took liquidity. Again, if you wanted to look at that. Candlestick pattern, bearish engulfing right over here. You also just have bearish momentum stepping into the market, as you can tell by there being an increase in the bearish candles and a weakening of bullish candles, right? So that's why I said weak bullish as well. Momentum indicator, RSI is below 50. You have 4 confluences. What is every single one of these confluences telling you? We are going to the downside. This is when you would enter the trade. This is where you put your stop loss, and you put your take profit at a 1.5, 1 to 2, whatever. That's up to you to decide. Now, you guys might be wondering, well, there's not always going to be all these confluences in my favor, Syed. So what do I do at that point? And it's simple. You just don't trade. At this point in time over here, guys, right? Let's go back in time for a second. Let's go back in time over here. Okay. Do we know that this support level is going to be turned into resistance? Of course not. Right? We don't know that. Right? Do we know when price reaches here that this is actually going to be resistance? No, we don't know that. But guess what? Oops, I went a little bit too far. But guess what? From here, price keeps on going lower and lower and lower and lower and lower. And now we know that this was support and this was a resistance. So this is 2 things that we know. We're in a downtrend and this is a resistance level. Now, do we know that price is going to come back here? Of course not. Okay, but guess what? Eventually price does. Now, do we know if price is going to show us weakening bullish momentum from here and start to put bearish momentum, bearish candlestick patterns into the market? No, right over here, if we were over here, price could just continue going up and up and up and up and go from a downtrend to an uptrend. We don't know. That's what I'm trying to tell you guys. We don't know. So we sit on our hands and we wait patiently until everything lines up in our favor. We only had one thing in our favor when price was over here. This was a downtrend. That was it. That was the only thing in our favor, right? All of a sudden, what ends up happening? Come on, give me 1 second. All of a sudden, this becomes a resistance. So now we have 2 things in our favor, but we still don't have anything telling us we can take a trade. What happens over here? We get bearish momentum and we get a bearish engulfing pattern. Now we have 3 things in our favor. And all of a sudden, at the time that the 3rd thing is in our favor, the 4th thing also becomes in our favor, which is RSI below 50. So we have 4 things in our favor. And you'll notice at this point, right over here, everything is in line. We're in a downtrend. We'll add a level of resistance. We have a candlestick pattern. Momentum is in our favor. This is when you take the trade. You're not taking a trade here, right? You're not taking a trade here. 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 You're taking a trade over here. And you'll notice that a lot of price action happened prior to taking a trade. This is what trading really is, guys. I'm not going to lie to you and say that you can take super duper sniper entries and yada, 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 right? And you can take trades. You can take longs over here and shorts over here, longs over here, shorts over here. No. Trading is about patience. Trading is about waiting for everything in your trading plan to come together, and that is when you're taking a trade. And guess what, guys? If this trade wasn't here, we just wouldn't take a trade. It's as simple as that. And there are going to be times, guys, when you don't take a trade and price goes in your favor anyways. There will be times, guys, when nothing gets in your favor. Nothing is in your favor, right? Or only one confluence is in your favor, and price just has the cleanest setup, but you're not going to take it because it doesn't follow your trading plan, and it works out. There are also going to be times when nothing's in your favor and it doesn't work out. Trading is just about waiting, guys. It's about waiting for the perfect opportunity to strike. This is the perfect opportunity to strike. Not over here, not over here. This is when we take the trade. Simple as that, guys. Okay? Simple as that. So let's go to another setup, right? Let's go to the upside now. Okay. Right over here, right? What do we have right over here? Support level. Very simple. Support level. Okay, actually, do I want to use this? I can. Actually, I should use a different Confluence. All right, we're not going to use support and resistance anymore. We're going to use chart patterns to show you that this works no matter what. So those 4 things that I wrote down, guys: trend, trend, structure, momentum, candlestick patterns, etc. You can flip them. Like you can put, like, let's say you don't want to use an indicator, right? You can just say, price action instead, right? You just don't want to use the RSI. You can say, I just want to see more bullish candlesticks coming into the market when I'm looking for longs. You don't have to use every single thing that I said. The one thing that I would suggest you guys use is definitely the trend, whether it be the 200 EMA or market structure. Definitely take trades in line with the trend. Okay, I'm just gonna say that, but you can do whatever the heck you want. So here we have this, right? What do you see over here, guys? Again, we're in a uptrend, right? High, low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Okay, very simple point blank period on an uptrend. Also prices above the 200 EMA. What do you see over here? Head and shoulders pattern, right? Left head. This is an inverse head and shoulders. This goes back to the video that I made on short patterns, right? So left shoulder, head, oops, right shoulder. Okay, now head and shoulder is a bearish pattern, right? An inverse head and shoulder is a bullish pattern. Okay, so what do you have here? You have an inverse head and shoulder right over here with a uptrend. Okay, so let's write down our confluences. You have 1, trend, 2, short pattern, 3, you could say key level as well, right? For this specific scenario, key level. What would be our 4th confluence? I guess we can use the RSI. Oh, actually, forget. We don't even have to use the RSI. We can just say candlestick pattern. Okay. So this is a strategy that this is literally a trading pattern or a trading setup you can take without the use of any indicators, right? So I can actually hide the 200 period exponential moving average right over here. So look, we're in an uptrend, right? I talked to you guys about that through before with market structure. Okay, what is our chart pattern? Said that before as well. Inverse head and shoulders. Left shoulder, head, right shoulder, break above. This confirms our head and shoulders. Okay, that's our chart pattern. In an uptrend, inverse head and shoulders, both signs of bullish momentum, both signs that price is going to go likely higher. Okay, we're in a key level, right? This is a resistance, turn support, turn resistance again, turn support right over here, right? I know that's kind of confusing, but don't worry about that, right? A lot of movement in this market, down, up, comes back, retests, down, comes back, retests, down, comes up, retests again, right? Now, what's our candlestick pattern? Right over here, okay? Let me draw another eclipse. Actually, I can just use this. Bearish candle, doji, bullish candle. What is that? A morning star pattern. We talked about this before. It is a morning star pattern, okay? And what is that telling you? A morning star pattern tells you that there is most likely to be a reversal from here, and it's going to be a bullish reversal. And again, what can you see from here? Bullish, bearish, weakening bearish candles, bullish candles stepping into the market, strong bullish candle. This is an engulfing candle. So not only do we have the overall trend, chart pattern, candlestick pattern, etc., we also can just tell by what candlesticks are printing out. Forget about the pattern specifically. We can just look at what the candlesticks are telling us, right? Bearish candles weakening, bullish candles stepping into the market, telling you that there's bullish momentum present. Okay, so let's write out every single thing again. So uptrend, 2, inverse head and shoulders. 3, we have resistance, SNR flip. SNR flip pretty much means support turn resistance, resistance turn support. Candlestick pattern, morning star, and then momentum, weak bear, bull, stepping in. Cool. These are all of our confluences for this trade, guys. Now the charts look a little bit messy, guys. Okay. I'm sorry about that, but I had to annotate everything. Otherwise, kind of some things can get lost. But you'll notice again, look at it. Trend, inverse head and shoulders, support turn to resistance, morning star pattern, bearish candles weakening, bullish candles stepping into the market. When would you take a trade? right over here. Where's your stop loss going to be? Below this level, right? Below the level of the head and shoulders, below the level of support resistance. And you'll notice it works out. Guys, this isn't like coincidence. There's a reason why it's working out. It's because you have multiple things going in your favor. If you just took trades based on the support level, would you have made money? No, you probably would have gotten stopped out because your stop loss would be over here. But guess what? Things were in your favor, right? You had resistance turn support. You had an uptrend, but it wasn't enough. You need other things, okay? So this had 5 confluences, the other had 4 confluences. You'll notice, guys, that the trade's confluences for this trade was different than the confluences for the previous short that I showed you, right? So you can play around with the confluences. You don't just have to use the confluences that I wrote down. The overall confluence you should probably use will be trend. I definitely recommend the first confluence you should look at when trading is trend. And the second one, if you really want to use it, is definitely going to be key levels. Like, you can trade without key levels, guys, but your win rate, your profitability is going to be much higher if you are trading in line with your trend and in line with key levels. The rest of these, when we're talking about candlestick pattern, short pattern, momentum, indicators like the RSI, you can flip them around, right? You can maybe not use the RSI. You maybe don't have to look at candlestick patterns, right? You can choose which ones you want to use and which ones you don't want to use. The main message behind this, guys, is that you can't just use one thing. You can't just take long positions when the RSI is above 50. All right, you can't just take short positions when we're just in a downtrend at resistance. You have to use multiple things in your favor. That is how you're going to become profitable. That is how you're going to become a trader that actually wins over the long run in comparison to those that lose. And you'll notice, guys, this takes a lot of time. Like, when does the uptrend start? The uptrend started right over here. Right over here. This is when the uptrend started. You had to wait for this entire uptrend to happen. Then you had to wait right over here for this you have to wait right over here for this head and shoulders pattern to come back and form. You have to wait for price to retest. You have to wait for price to print this candlestick pattern. It takes a lot of time. It's a lot more difficult than just taking longs at support. It's a lot more difficult than just buying when RSI is above 50. But this is how you make money. You have to have patience. You have to wait for everything to come together. And it's not always going to come together, guys. You're going to have multiple setups where price just never comes together with all the confluences that you want. And when that happens, you just have to sit back and not take a trade. But when it does come, when everything matches together, that is when you're supposed to execute. That is when, hands down, you risk your money, you put your money where your mouth is, you take the trade. And if it doesn't, you just sit on your hands. And this is what's going to make you money, guys, using multiple confluences. This is what made me profitable in a technical perspective. Because if you just have one confluence, you're just not going to make money. All right? Point blank period. And you know what? Just for you guys, I guess I will also add another indicator version of this. So we'll have the EMA. We'll have 2 EMAs along with that, actually. And then so let's make this the 9 period EMA. This fast. Then we'll make this one the 21 period EMA, and we'll make this blue. Okay. And then what other thing can I add to this? Try to think. Try to think about what other indicator I showed you. Oh, we can just add RSI actually. Yeah, screw it. All right. And let's see where we get a trade. Now you'll notice, guys, look at what over here, right? RSI went below, right over here. It goes below the 30. If you were to long, you would have made a little bit of profit, but you would have gotten stopped out overall, right? Over here as well. Look at that. RSI goes below 30. You probably actually would have hit take profit on this one. Not gonna lie. But you just, again, sometimes it'll work out, sometimes it won't. But that's why you put everything in your favor. You put all the confluences in your favor. That's how you're gonna make money. So let's look at this, guys. Right, this is only using indicators. So no price action, no candlestick patterns, no nothing. Literally just indicators doing the same exact thing. Okay, what is our overall trend? Price is below this white line, which is the 200 period exponential moving average. We are in a downtrend. What do you see happen right over here? Price spikes above the 70 level. So if price is spiked above the 70 level, what does that mean? It is overbought. If it's overbought, that means there's too much buying pressure. Something has got to change. There has to be a downtrend. Okay, so if there is a downtrend, or sorry, no, it's overbought, something has got to change. Sellers have to step into the market. Sellers will step into the market because the market is balanced, guys. So if there's too many buyers, the sellers are going to step in. Too many sellers, the buyers are going to step in. Right now, there's too many buyers. That is a bearish indicator in this point because there's way too many buyers. Okay, we're overbought. So now the sellers are going to step in. What do you have right over here? Right? You have, when do you have it exactly? You get it, and this candle, you want it to be below. Come on, give me 1 second, guys. Right over here. You have the 9 period below the 21 period. What is that telling you? The faster EMA is below the medium period EMA. That is telling you that the shorter term trend, right? Overall, we were, what is the term? What is the shorter term trend was to the upside, right? We had a lot of bullish momentum. But now, after it becomes overbought, what do you see? We're below the 200 PL EMA, and now there's a lot more sellers stepping into the market. You can tell by the bearish candlesticks. And now momentum has shifted in the smaller time frame from a uptrend to a downtrend. Where is that momentum shift? Right at this indicator, right at this candlestick right over here. And if you're wondering where I know, you can literally just look at prices over here. Right, so you notice the red EMA went below the blue EMA. That means the shorter term trend is now in the downtrend. So what do you have? You have the overall trend, right? Is in a downtrend. You have overbought on the RSI, right? Telling you that, hey, chances are we're going to go to the downside. You have your momentum stepping into the market as well, right? That's 3 indicators right over there. And so when would you enter? Right at this candle. Okay, now where would your stop loss be? If we're only using indicators, you'd use ATR as your stop loss. 1182, okay, and you would get stopped out, and that's okay. You'd get stopped out on this trade, so you would take a loss. But guess what? Where do you get the exact same Confluences again? On this one, right? On this one, price is below, the RSI is below 50, so we're still with a lot of bearish momentum, right? So you can still take this trade. The red is below the blue, which means that there's still bearish momentum in the market, and we're still below the 200 EMA, which means that we're overall in a downtrend. Bearish momentum with the RSI, bearish momentum and price action with the EMAs, and then overall trend in a downtrend. So what do you use? 2 times your ATR for a stop loss, right? Come on, right around here, right? Enter right over here. Take profit at a 1 to 2. First trade was a loser. Second trade was a winner. Up 1% between these 2 trades. You notice, guys? Again, it took a while to get here. If you looked at the market right over here, you're not getting a trade up until here. You're not getting a second trade up until here. It takes you some time. But once all the indicators, once all the confluences are in your favor, that is how you're going to make money. Okay, so I hope this video made sense to you guys. Hope you guys enjoyed it. Hope you guys like it. That being said, guys, that's it for the Confluence video. Again, guys, trade with multiple Confluences. Do not just trade off of one thing. You'll get more trades that way, but you're not going to make money that way. So wait for everything to come in line. Wait for everything to come together. That is how you're going to make money. I look so weird with a hat on, guys. Anyways, that being said, guys, peace out. Assalamu alaikum. Allah Hafiz. Hope you guys enjoyed. And yeah, this course is almost done. So yeah.